What's going on, everybody? I hope you guys are well with the holiday weekend behind us, short week ahead of us, and today we had the Fed minutes, and the reaction was weird. Right? It is confirmed that they want to do 75 basis point, 50 between 50 and 75 basis point in the July meeting, which was expected. If you guys track the Fed Watch Tool website, you will know that the anticipation is for that type of rate hike. Now, people were expecting an aggressive move to the upside or to the downside, but we just got something totally different. So let's review the analysis today. Let me review with you guys what I'm still thinking is going to occur in the markets, right? Using our Ellie Wave analysis, which is a tool that we use here at Trending Waves to allow us to forecast the possibilities and probabilities of the upcoming moves using market psychology. All right, so if you guys are not familiar with the Ellie Wave theory, I do encourage you guys to go and check that out and start learning about it, or ask me questions in the comment section below and I'll be happy to answer them. As an alternative, you can join Trending Waves. We review and discuss this form of technical analysis day in and day out. All right, so enough with the chatter. The markets are still trading sideways, right, as expected. Given the fact that we are correcting our rally from June the 17th through the June the 27th high, right? So that rally is now being corrected. Whether we're looking at this as a possible wave 1 and 2, right, or we can look at this as a completed wave 1 here and we're correcting in the wave 2, and we're now gearing up for the possibility of an impulsive structure to the upside. We're going to review that chart with you guys in just a second. So the markets here, I think that by now are reaching a potential top in the wave 2 of the lesser degree of the minute degree, right? So we have wave 2 here complete on June the 28th, wave 1 ABC into the wave 2. You can clearly see that we have hit the 618, 385.39. We are ranging below it in the wave C. We can count 5 waves from this substructure. So I think it is likely the case that the market has completed this smaller cycle, and coming into tomorrow and next week, it is probable that we're going to start heading lower. But confirmation does not come in until the break of south of the wave 1 low. All right, so we're going to be preparing for that. Okay, we're going to be patiently waiting, because so far, the markets can still just sideways, move sideways after today's digestion of the Fed minutes that occurred a couple of weeks ago. But for now, the 61.8 and the 50% retracement, which I've highlighted here, are the ones that I am looking for as a resistance. However, it is not always a bearish case here. We also have our bullish count, right, which will suggest that, let me just clean this up here, which will suggest that a complex correction has completed its course on June the 17th. If I take you guys up to, let's say, the 4-hour time frame, the wave count suggesting this is that from our recent highs earlier this year, right, we had 3 waves to the W, 3 waves up to the X, 5 waves down to the A, B, and then final C wave of wave Y that ended on June the 17th. And now, since we've been rallying in the wave 1 and 2, or at least trying to do so, and trying to break out into the wave 3. So how does that wave count look like? So it is a little tricky, right, off the lows, because we can count 5 waves. I mean, there are other charts such as the XLK, there are charts like the triple Qs and other names from the industry groups here within the S&P 500, right? Especially the SMH2, which is a semiconductors ETF, that are all suggesting more downside pressure. The dollar's going up. We have that also as a catalyst, or as a pressure gauge that is giving the markets a little bit of downside, of downward momentum, or downward pressure. That's the term. My bad. Wrong day today. So bullish count suggests that we are completing the wave C, and we're now gearing up for the wave 1 of wave 3. All right, we actually found support. If I take our fib extensions here, sorry, our fib retracement, we actually found support at the 618 of the wave C of 2, which is an appropriate level to find support. Now that's why it's becoming tricky, because we didn't pass, or we didn't overshoot the 618 into the 786, which would have given me the little bit of hint that this is not a proper wave 2, but rather now we have a actual sort of like wrench in the wheel, because the 618 is an actual common level for a wave 2. All right, so if we take a look at the 15-minute time frame, we can digest, right? 1, 2, 3, 4, and 5 potential wave 1. So it'll look something like this, right? Oh, my bad. Here we go. So wave 1, 2, 3, 4, final 5th. We can clearly see that it's giving us or wave 3, right? 1, 2, potential 3. No, that doesn't make any sense. 1, 2, 3, 4, and 5. What I'm being thrown off by, guys, is that this high here made a new high in RSI. Let's take a look at the 30-minute time frame. You see, so that's what I'm saying. So we could either be in the 3-wave up, potentially continuation to the upside tomorrow into Friday, or this is the actual completed cycle. But I don't think so. We're not showing any types of divergence, as you guys have been hearing from my videos before. Divergence usually shows up in the bearish divergence or positive divergence, whichever shows up at the end of the cycle, wave 5 or wave C. In this case, we have a peak here while markets are making another high. All right, so going back to my original thesis, can we anticipate a pullback tomorrow? It is likely, given the fact that our bearish count is showing us those signs, right? Our bearish count is showing us those signs that we have hit the 618 retracement, topped off on the C wave. We couldn't break above it, and we're excuse me, I got a little bit of you did not come and see me to watch me drink water. So 1, 2, right? So bearish, this is the bearish count. So it's giving us hints that we may start getting lower. RSI here is showing a little bit of weakness, but we shall see. I'm anticipating move to the downside by end of week. All right, now back to our bullish count. So in the event that we continue on higher, where are our wave confirmation? So wave confirmation for invalidating the structure is at the break below the origin of this wave 1, right? But confirmation to this move to the upside is at the break of wave 1. So we have this range to work with, right? We have this zone, this actual area, all of this to work with, right? I mean, not technically, but we don't want to see price action over here, right? The zone start doing something like this, right? And then fail. We want this to do something like this, right? ABC to the 2, 1, 2, 3, 4, and 5 to complete the 3rd, pull back into the 4th, and then find the 5th. That's what we want to see. We don't want to see this type of price action start failing and not break above this wave 1 high, which is 393.45. All right, so you have that in mind. Please keep that on your notes because it is important coming into the remainder of this week. Don't forget, Friday is what was Friday? Let's see, Forex Factory. So Friday is another job day. It's another report, right? So Friday we have unemployment rate. So non-farm payroll. So that's important for us to keep our eyes open for. So that could give us a little bit of a catalyst for the markets to do that thing, and then move up and down or whatever. I don't know. Take my analysis as a grain of salt. So triple Qs, guys, triple Qs. Now the triple Qs here are giving us the hint that we have surpassed the 618, right, into the 786 resistance, and now potential downward pressure. All right, so look for the 291, 288, that dollar region or that handle, right? Those two zones for us to hold as resistance and look for a possible short opportunity at the break of wave 1, which is down here at 275. If markets continue progressing higher, then like in the SPY, right, it is likely that this is the 1, the 2, right? 1, 2, 3, 4, 5. You understand that, right? So let me just shut this off. So in the event that this is a wave 2, right? In the event that this is the 1, ABC2, this is another 1, 2, 3, 4, 5 to another higher degree wave 1, and then so on and so forth. But if we start failing from this zone and start going lower and break south of this level, then it is likely, ladies and gentlemen, that markets will continue their journey to the downside. We'll just have to wait to see how the overnight session and futures market digest the Fed minutes, and we shall take it from there. All right, guys, so let's take a look at the SMH. SMH, as I pointed out before, right, is clearly showing us that the momentum is to the downside, and SMH is a big industry group within tech. So we do have to pay attention to this chart. So 1, ABC to the 2, 219, 218 is our resistance. And now we have the 1, 2, right, potential 1, 2 in the zone, and then gearing up lower. All right, guys, so that's that. The IWM also showing some signs of weakness. XLK at the same time is giving us that weakness as well. The Dow at the same time also. And then the ARK Innovation ETF is just showing signs of sideways momentum. Nothing to do with any upside impulsive structures. All right, we're going to take a look quickly at the dollar. The dollar is right over here. Where are you, bad boy? Right here. So one of the things that I did notice over in the group chat, I haven't updated this here just yet, but we are showing momentum divergence. Okay, we are showing that. So as price makes a new high, RSI makes a new lower high. So that's positive, right? We have the 8-hour time frame showing the same divergence from this point to that point, from this point to this point. 4-hour, same deal. The 1-hour time frame, same deal, right? So that's indicative of a potential pullback in the dollar, thus potentially giving us that opportunity for price action to head higher in the S&P or the US markets. All right, guys, as you can see, Bitcoin and crypto are doing okay for the moment, right? This was given after the market closed here, and US oil still moving in line within our triangle. We haven't invalidated the count at 93.16, so I'm still looking at this as the A, B, C, D, and E before a potential break up or break out into the upside. So that's that. All right, guys, till we break south of this zone, right, 93.16, then this is going to be the case. All right, guys, so thank you so much for tuning in. Let me know if you guys have any comments, any questions, thoughts, concerns. Leave your comments down below. See you guys tomorrow. Take care.